Good afternoon, ladies and gentlemen. Hope you're doing well. This is your typical Smart Money Sundays episode, breaking down exactly what we're expecting kind of on a macro level to happen during this week, during the week ahead. Obviously, we did our live session yesterday on the Trading Nut YouTube channel. So hopefully you tuned into that. It was an extensive breakdown across the broader markets, kind of outlining explicit levels of interest that we're looking at for obviously the majors and a lot of the crosses and exotics, right? But what I like to do myself, if this is new to you, is create Smart Money Sundays myself, more of a condensed, kind of abridged version of what is discussed on the live sessions. And typically like to have it between kind of 20 and 30 minutes and quickly run through all the levels so that you can mark them off and be prepared for the week ahead yourself. All right, so as usual, let's start off on Euro USD, and we're going to kind of breeze through the majors today, the major pairs, simply because in all reality, the dollar is just unrelenting, right? The strength, and obviously with FOMC this week and the rate hike of 75 basis points, obviously as consequence to the CPI figures that have come out indicative of further dollar inflation, the Federal Reserve needs to continue raising rates in order to kind of curb that inflation down to that 2.5% target, right? And so with, rising interest rates, that, hence that dollar strength relative to other currencies in the world, doesn't mean the dollar itself is actually strong, right? Because we're seeing historical inflation figures. But anyway, I'm going to kind of breeze through some of these pairs. Enough of that tangent. Euro USD, obviously this was the original level that we gave out, guys, on this episode weeks and weeks ago, right? We were looking for price to come up into this region when price was trading down here. Sure enough, we did. And there really hasn't been much of a selling opportunity since we've been up in that price point, right? And so last week on this episode, obviously we were looking at retracements into at least level 1 or level 2, and we never did get that, right? We kind of just consolidated, ran the highs, and had that significant sell-off with FOMC as the catalyst, right? And so now we have a new trading range, right? Obviously this lower high, this lower low. And so all that we can do here with this momentum is simply sell retracements, right? And so in terms of this time frame, right, with this trading range, right, this would be a significant premium relative to current price, where obviously continuation short would be attractive, right, in terms of that premium. But it's a matter of actually even getting up there, right, with the momentum that we're seeing in the markets right now. So we very well could just simply continue with lower time frame, right? Lower time frame wave play to the downside to finally achieve that overall objective. Now, what is that overall objective? You'll remember we talked about this. We've been kind of talking about this 935 level, right? Kind of historical lows, right? With this kind of supply flip to demand, right? So 9350 is where we're fully expecting price to trade down into. I really don't see anything stopping it until we get down into here, right? There's really nothing here to stop price until we get down into this significant level, right? Just because we hit 9350 does not mean we're going to be going long from there. It's just simply the objective, right? To give us further conviction behind looking to sell retracements in this market, right? And so looking at the daily time frame, right, the first thing that kind of comes to mind is this daily doji candlestick as an initial reference point, right? It's just simply trickling back up into that and the continuation lower. Now, if we do get a higher time frame retracement, which we always want, right, because that would mean more premium, right, more pips to catch, right, swing this thing lower, does not mean that's going to happen because we want it to, right? And with massive bearish candlesticks, a pause in the market here, massive bearish candlestick engulfing on Friday, I really wouldn't expect price to immediately retrace into our higher time frame level of premium. Now, if we do open up on Monday and kind of railroad and engulf Friday's price action, then absolutely, right? That would be more of a, okay, look for a retracement continuation up into these higher levels of price for the continuation, right? But as it stands now, right, we can only expect that price would retrace into somewhere like this daily open. All right. So that brings us into this kind of structure of candlesticks here, this kind of pause in the market. It's like up close, continuation, right? Just simple kind of break and retest here is all we can expect at the moment. All right, and that's really kind of across the board here on these dollar pairs. I mean, GU, look at Friday's closure. Absolute death, melting. Right? Last week we wanted that 90-minute. We wanted to run these relative equal highs, the descending liquidity, while trading up into that 90-minute. Right, I'll just point that out again. Right, this 90-minute up close is really what we wanted, but price just rolled over for the entire week. Right, and so looking at this again from a macro perspective, I really wouldn't expect price to stop. Right, there's nothing really to stop it. Right, as we seek out the liquidity resting beneath historical lows from 1985. Right, so 1.0520 is the low from 1985. Looks like price is going to go ahead and take that out. All right, and so again, in terms of the here and now, we can hope for a higher time frame retracement, but with the momentum, can't expect it. Right, and so for me, it's going to come down to kind of this most recent up close. Right, if we can just simply trickle up into here, I would designate this as sufficient premium for continuations. Right, down into that historical pool of liquidity. All right, so very similar to Euro USD. Otherwise, if we kind of engulf, start trading higher, then we can look at seeking out this trendline liquidity and trading into that 90-minute that we wanted last week. All right. Aussie dollar. Right, really same deal here. We have hit the objective, and again, this is kind of case in point. Doesn't mean we're going to reverse once we hit our objective, right? We can then, once hitting the objective, kind of scan the cross-reference with other pairs that correlate with AU and realize the fact that there's nothing indicative of a reversal on the dollar yet, right? So we should simply be continuing to trade with that overall trend and momentum. And with that, I think then this can become our next objective, right? This kind of weekly down close candle, 6,200, right? So we do have some ways to go, which means we should continue to be looking to sell retracements as we are across the board on these dollar pairs, right? So just a reminder, obviously we are in this swing. Right, from all the way up here, we called this out perfectly. I think it was 2 weeks ago. I called this exact level out on this very episode, Smart Money Sundays. So I know a lot of you have messaged me and said you caught the move, are still in it. We're still in it. That's wonderful. Massive move here with a very tight stop loss. Obviously is up nearly 400 pips. Right. And ever since then, there really hasn't been a great selling opportunity on this market, really until this kind of price action here, right? With the up close, the break of structure, simple retracement for continuation. That was a beautiful trade to close out the week last week, right? You can see that's just simple kind of 61.8 premium retracement continuation, right? And so again, in terms of the here and now, we can only hope for a retracement into, remember this was our POI 1, but our preferable POI was this extreme, right? This up close here. We can only hope for a retracement into these areas for continuations, but we can't expect it, right? So until then, until we see something indicative of that, we can be trading that lower time frame price action, right? So I don't really see necessarily anything clear on the lower time frame at the moment, right? You can be looking at this as structure, lower highs, lower lows. Right, so this is kind of the lower time frame trading range. Right, so looking for retracements, continuations here. But again, I don't really see anything that kind of jumps out at me in terms of a candlestick point of interest. So really what we could be doing is waiting for time and price, wait for consolidation, a buy to sell, and a continuation. Right? We'll trade that lower time frame price action when you don't see a clearer picture on the higher time frames. All right, USD CAD is another one, beautiful swing opportunity that I also gave out to you all a few weeks ago, precisely from this price point, right? This 8-hour down close candle. So same time as AU. I know a bunch of you also caught this one on USD CAD, currently up over 600 pips. So wonderful, wonderful trade here, right? Enough to, depending on your account size, to support your living expenses probably for a whole year. But nevertheless, all right, in terms of the here and now, again, retracements for continuations. If you look at this from a macro perspective, and I think I kind of outlined this last week, it's the fact that we do have equal highs here, relative equal highs on the very higher time frame, on the weekly time frame, that were engineered in March of 2020 with the onset of the pandemic. Right, and so I kind of firmly believe that this is going to be the higher time frame draw on liquidity, and we should see that continued dollar strength, Canadian weakness, as price, right, seeks out the liquidity resting beneath those highs, and believe me, there is a lot of it. Right, so until then, right, we can hope for higher time frame retracements and continuations. In terms of points of interest on this one, I really don't see anything again that necessarily jumps out at me outside of this price point here, right, where I have it boxed off. Now this is, mind you, in the middle of this trading range. Right, it's in the middle of it, but I don't really see anything else. So if price does get down into here, I'm obviously not going to be placing a limit on this, right? But I'd like to see that consolidation, kind of sell to buy, and then confirm and continuation. If not, in terms of an extreme, right, I think we can possibly get back down into here, fill in some of this inefficient pricing that was left, and that would still be within our trading range. Higher low, higher high, higher low, right? So we can hope for this, but not expect it. Just still keep it in the back of your mind. All right, so these are the levels on UCAD, POI1, right? POI2 coming in around 1.3050. NZD USD, very quickly, very similar to the Aussie dollar, right? This is the level that we wanted up into here. Again, we just rolled over for the entire week. So this is our trading range still, right? Retracement, lower high, expansionary move, treating this as a singular leg. Prefer the higher time frame premium, can't expect it, can only hope for it, right? And so this is the initial POI, 0.58, right? So 5,800, trading back up into this kind of up close before we rolled over. All right, UJ. All right, so obviously this is another one that I gave out last week. All right, this is our initial level, busted through it, okay, but this is our secondary level right here. Right, which you can see had a beautiful reaction from this level. Currently up 260 pips. I would be taking partials here. I've already taken partials myself. Why? Because we did have these equal highs, right, that we had to buy to sell. We ran that liquidity, right? So is there the possibility now that we have purged liquidity and made a significant push lower, that price is simply retracing for that move lower? Absolutely. All right, so we have to secure what profits we have. So you should be at least having taken partials and be break even at this level that was given out. All right, but another good trade given out for free last week. All right, now let's get into these yen pairs. The majority of them are looking pretty good and honestly more attractive than the majors this week for me. All right, I'm kind of wanting to hone in on some of these yen pairs, right, and the significant momentum that appears to have entered with news last week. I know there was Bank of Japan monetary policy that came out, we saw a significant sell-off on a lot of these yen pairs, right? But for EJ, this is really my level. It's pretty self-explanatory, right? It's kind of a nice sell model. Those of you who follow us or within our VIP have taken our courses, you know about this, right? The sell model, we'd like to see that run on the lows first, the run on the highs, right? Having run out this most recent swing point high with the buy to sell, significant volatility injection, right? Inefficient pricing. So if we can get back up into here, right, kind of trickle up, this would be a nice level, in my opinion, for continuation short. All right, so this is the POI on EJ, and it's kind of very similar across the board on these yen pairs. The same type of model, right? Consolidate, very kind of small, low volume candlesticks, and then the massive buy to sell expansion, right? So we can dig back up into here, right? This is the point of interest on Swiss franc, Japanese yen, right? Dig back up into here. This is kind of the initial point, but I think we can possibly dig up into there as well, and then continuation, right? And we have some kind of nice liquidity to be targeting in terms of sell side liquidity to the downside. All right, in and around kind of 141.50, 141. All right, so that looks pretty attractive to me. All right, Canadian dollar, Japanese yen, very similar situation here. We traded into our POI from last week, we reacted but failed, right? That failed, broke through, turns into supply. So very similar situation, right? You can see kind of range bound, low volume, right? Run the lows, run the highs, buy to sell. Nice sell model in place. So if we can retrace up into here, very similar to the other two, then that looks attractive to me as well. Might as well go over AJ and NJ. So those are also quite similar, right? Here's the level on AJ, right? Retracement continuation, right? After running range bound liquidity. And the same applies to NZD-JPY. All right, so hopefully you're seeing this kind of theme here on these yen pairs. Love to see these full-bodied, high-volume candlesticks enter into the market, rapid reaction after having run out buy-side liquidity. That is indicative of institutional involvement. All right, so premium continuation, right? Simple, to the point. All right. Euro GBP is another one that continues to moon, right? And obviously last week we were looking at kind of this area, right, as a retracement for continuation. We just missed it. That's okay. It happens. You don't have a crystal ball. Only a few pips, right? Obviously it then subsequently mooned, right? And I don't see this thing stopping for the time being. The momentum is simply, very strong to the upside. So we should be treating retracements as excuses to pull back. And I really do like this 2-hour candle for a continuation. If that breaches, then we obviously have this kind of last point of return, extreme point of interest within this 2-hour down close, right? But looking for pullbacks for continuations into 0.9, right? That's going to be my short-term, medium-term target. Euro NZD, right? Currently in a bit of consolidation, but I think price will be magnetized to this old high and the liquidity resting above it. So we should be treating retracements as excuses to buy. If you can look at this on the lower time frame, right? It's a bit of a flag pattern here, right? Kind of engineering that descending liquidity, right? But for me, I'd really like to see a sell to buy, right? Running out liquidity resting beneath these lows, trading down into our point of interest from last week before we see that ultimate push higher into the old high, right? That brings us in around 1.6670. So keep this level on your radar. It's really that 30-minute candle. All right, so this 30-minute candle that was never mitigated, never accounted for, where we traded into supply here, had the reaction, but we busted through, right? Breaching that supply, flipping this to demand, which we have not yet accounted for. So if we can get that run lower, I'd really like to see that level of discount for that continuation to the upside, right? So keep that one in mind. Pound Swiss franc. I mean, guys, this was this level we talked about weeks ago, right? And we just continue to trickle down. Doesn't make this level any less valid, right? And so, with a market of this nature, when we're simply trickling, right, and we're in an overall higher time frame downtrend, this significant point of interest has not been accounted for. Ultimately, they will use news as an excuse to actually get us up into that level and account for it. Right? Sure enough, last week that's what happened. News comes out. We use that as an excuse to destroy all of the liquidity and people who are selling within the middle of this trading range, get them out of the markets, mitigate prior orders, continuation lower. Right? So beautiful trade. It's nearly a 1 to 10 in terms of targets, currently floating 1 to 8.5. Right, so congrats if you remembered this level, you kept it marked off, and you caught this opportunity that was also given out for free. All right. Love providing value for you guys and literally free setups every single week, impacting hundreds and hundreds and hundreds of people across the world. It means everything to us. It also, helps us hold ourselves to a higher standard. And maintain that accountability aspect within our own analysis so that we're also prepared week in and week out to provide as much value to you as possible. So hope you're really enjoying all this content that we're putting out on a weekly basis. All right, but Euro AUD, similar to Euro NZD, obviously last week we were looking at discounted pricing, which we did trade into here, had that beautiful reaction, but we never ran the buy side liquidity here, right? So I'm still personally looking for excuses to buy. This is not a top in the market, right? They will run out these highs, right? It's just a matter of when and being patient, right? So for me, I personally think we can make another pass on the lows, right? This low. Now, whether or not we maintain this point of demand is yet to be seen. That's okay. We very well could kind of breach through and then snap back into the range and run higher. I see that quite often, right? So keep this one on the radar, right? Look for the sell to buy opportunity, right? Sell to buy here, respecting that demand, or simply running through, spiking through it, and then the sell to buy. Ultimately, we have that confidence and conviction that price is going to be seeking out, right, that pool of money resting above the highs. Right, so just be patient for this one. It will play out. It's just a matter of time and patience. All right, AUD CAD. This one was quite frustrating last week. We were looking to play off of this up close, right, the buy to sell that ran out relative equal highs here. We had the reaction. We didn't have the follow through. Didn't have the continuation. We decided to run it one more time. That's fine. Got stopped out. Lost the trade. It happens. Can't do anything about that. What you can do, right, is understand the overall levels, right, the overall trend, right, have confidence that your analysis in terms of, where price was ultimately heading was actually still intact. You just had the entry slightly off, right, you're just a little premature to the game, right, and so with that, we still had the confidence in this trade, right, or in the directional bias of this market, and so after getting stopped out, we simply waited, right, price traded into demand here, had the reaction, that failed, we broke lower, hence why I sent this exact level out to, and Nate did as well, to VIP. We caught this trade last week, already made back what we lost on the loss and more, right? We're targeting lower prices here. And just a testament to the fact that just because you lose a trade doesn't mean you need to get down on yourself, right? And kind of move over to a different market, right? If you still have good confidence behind higher time frame targets, then simply accept the fact that you were early to the party, right, and wait for a better opportunity to present itself for you to go ahead and target that ultimate objective, right? And that's what we did here. So VIP members are all in this, or at least they should be, from this exact level, right? Floating in very solid profit at the moment. Very clean setup, simple demand to supply flip, on AED CAD. So congratulations. All right, already talked about AJ and NJ. So the last one, nothing pertinent on this is NZD Swiss franc, but this is another one that was handed out at least to our VIP members because I think this was last Monday, right? And I kind of want to highlight this, right? Because we had a beautiful wick entry and reaction, very similar to GBP Swiss franc. And go ahead and look at this from a lower time frame perspective and why I had this level as the point of interest. And really, it was simply understanding the value, right, and the significance of time and price, right? In this instance, we had this range created in London Open. I talk about this so often, right? 2 to 3 a.m. or 2 to 4 a.m. in the morning, you will most often see that type of manipulation, right? That type of institutional sponsorship created that gives us great clues and points of interest as to where the market will be going. Right, so in this instance, we had that sell model where we run the lows, run the highs, and then break lower. Right, so simply this becomes the point of interest of institutional manipulation to account for, to mitigate. Right, and so again, news as the excuse. When news came out later last week, you can see we just had that massive volatility injection into the market, just to get us back up into that level, that predetermined level that we knew price needed to mitigate and account for. This is why you can't get scared of news. News is just the excuse. It's just the catalyst to push price from predetermined price point to predetermined price point. Right? So just showing you the risk to reward potential in this already, right? Because you have rules, right? And because you're disciplined within your trading and understand how the banks manipulate the market, you would already be up 1 to 6.5 on this one, likely running out these lows for 1 to 8. Right, so it's just simple things like that where you don't have to overcomplicate it and don't have to, psychologically suffer because of a significant move in the market, because you understand the underlying logic behind the market and why it moves the way it does, and can be able to explain, right, that underlying logic behind every single move in the market allows you to trade with confidence and with ease. All right, so another beautiful opportunity, simply looking for buy to sells, all right, excuses to continue to get net short on this market. All right, so really hoped you enjoyed this video, guys. As usual, please like and comment your feedback. And if you like the way that we break down charts, simply head over to our website, arielfxtrading.com, and book a free call with either Nate or me. And, we'd be happy to discuss how we can kind of formulate a customized plan for you to help you reach your goals and meet your, ultimate objective of becoming a fully funded, consistent, profitable six-figure trader online and achieve that financial freedom. All right, have a great week, and we'll talk to you soon. Thanks.